Hi, it's David here, CEO and founder of the Freedom Founders Mastermind community. I often have the opportunity to have phone calls, consultations, discovery calls, if you will, with some of our high-income, high-net-worth professionals who are really on the hunt for how to better navigate the economy with their investment capital. And looking at alternative investments outside of Wall Street and the stock market is something that a lot of people are looking for, at least for some level of diversification, which I think is smart. And the calls I get are, well, David, I'm looking at some real estate opportunities. There's somebody in my local area who has some kind of a fund. It's a real estate fund, and they have some kind of assets in it. They do single-family rentals, or they do multifamily in a syndication, or XYZ. It's what I call friends and family investing. And it's very, very normal when you're getting started with something and you haven't expended the time and effort to really to gain a knowledge base and understand what the arena looks like. And that's a fallacy that I think is going to trip a lot of people up. It's like if you were going to buy a used car for your daughter. I love to buy used cars because they've depreciated down. You can get good used cars, for a fraction, not a fraction, but substantially less than paying for a new car. You understand. But I also don't really understand the mechanics of cars. I'm not a mechanic. And so you're buying it for your daughter. And let's say that you go to a dealership and you specified you want, a good four-door sedan, and maybe with, around 125,000 miles on it. I'm making this up. And so you call the dealership and they say, yeah, we've got about 5 that would fit that category, 5 different makes and models. And they put them out there, and let's just say you don't know anything about the makes and models, but from the outside, the exterior, all 5 vehicles meet the basic standard. They're four-door sedans, and they all look fine from the outside. They're not beat up or scratched up. These are nice used cars from the outside, and they're all priced pretty close to each other. And so now you've got to make a decision. Well, which one do you take? Well, wouldn't you like to have an objective third party take a look under the hood, under the chassis of each one of those vehicles? Would you like something from Consumer Reports that just gives you the basic, what's been the track record of this particular model in this year since its inception? Would that information be helpful to you? Well, I'm sure you'd say yes, it would. Do you want to take the time to go dig all that out? Well, you could. You could go online. Yes, you could hire mechanics or take these cars to mechanics. You could do all that, and it'd probably be worth your effort. However, your time is worth a lot. So my point is this. If you were part of a group or community that did all this footwork for you, that curated the best vehicles, and now I'm talking about real estate vehicles, with the best operators, and could provide track records and financial operational systems that you could look at and understand what they were and say, well, that one looks better than this one because now you've got some diagnostic material. Wouldn't that be better than just trying to do it on your own? The headwinds that we have in the economy right now are causing a lot of what I call non-operators, more financial arbitrage people who use the low cost of capital in the last number of years to just kind of flip properties, whether it's single-family properties, short-term rentals, could be multifamily self-storage, and just flip those properties because it was always the greater fool theory. Someone would always buy it at a higher price as long as the cost of capital is low. Well, that dynamic has completely changed, and now that model doesn't work. So those who are not good operators, and trust me, I'd say about 70% of the people who provide real estate investments to the public or to people like you and me are not good operators. Some are actually very poor operators. Some are probably at best mediocre. There's a small tranche of what I call good operators. Those are the people you want to invest with, because they can make it through the headwinds of a volatile economy, of a recession or higher interest rates. That's where you want to be. And that's why I always love real estate, because it does make it through the recessions if you choose the right model, the right asset, and it's managed well with the right financing in place. Those are key attributes that most people don't get under the hood to take a look at when they're thinking about making their first real estate investment. Just be cautionary in this current environment that you don't do the same thing and not get some good advice and understand exactly what you're investing in.